In 2022, Meta, Google, Nvidia were crashing. Russia attacked and invaded Ukraine. Inflation had hit a 40-year high. There were articles left, right, and center that you should sell out. But since then, Meta more than 5x, Nvidia more than 10x. Google has tripled within a matter of 4 years. S&P 500 reached all-time highs. The fortunes made in 2026 were created in 2022. History presented a similar opportunity to everyone right now. If you are afraid of any of these four fears, falling stock market, SaaS is dead, AI is a bubble, oil prices, recession fears, watch this video to get rid of your fear and see what history suggests us we should do. Fear number one. Let's play all the three possible scenarios based on stock market history of last 50 years. Number one, stock market bottoms within the next month, or we are close to the bottom. Chances of this is around 60 to 65%. Scenario 2, stock market continues to decline, say, for the next 12 to 18 months, and then recovers and reaches all-time highs. Chances of this are moderate, around 30 to 35%. Scenario 3, stock market continues to decline for the next 5-10 years. That has never happened. The only time that happened was when the dot-com bubble burst in 2000. But we'll cover this in the fear number 4, that this scenario is totally different from when dot-com crash occurred. So this leaves us with two winning moves. If you continue to buy or double down on your averages, if you had done this in 2022 and invested in Mag 7, you would have achieved annualized return of more than 40% in the last 4 years. The second move, find and try to time the market and predict the bottom. But even the great Warren Buffett wouldn't suggest to do so. If you sell out, you could lose on massive gains if we are close to the bottom. Narrative number 2, software is dead. Let's see what the great Nvidia CEO has to say in this regard.
There's this notion that the software industry is in decline and will be replaced by AI. It is the most illogical thing in the world. And
history proves this is normal, and whenever a new technology such as AI or any other industry is disrupted, at least 3 to 5 years to see returns from investment by the major software companies. Currently, we have achieved only 11% productivity gains, and this is just the beginning. Electricity invented in 1880s, but the booms we saw was 30-40 years later in factories. Computers started in 1970s when mainframes were established, but the boom it achieved was in 1990s. Similarly, internet came around in late 1990s, but it was around 2004 or 2005 when SaaS, cloud, mobile, all these industries disrupted software. Today, the technology is moving even faster. ChatGPT was launched in 2023. For us to see those productivity gains would be around 2027 to 2030. So, should we sell out of software companies? No. We should find best opportunities to take advantage of this next wave. That is the AI. One of those is the AI inference industry. It's supposed to triple within the next 5 years. AMD is a big market player. It's already projected to grow its revenue at 35% or more for next 5 years. Google, Meta, and Microsoft are spending more than $500 billion. And we'll cover that scenario of current evaluation, prices, and spend when we cover fear number 4. Fear number 3, inflation, supply chain issue. Think of it as a massive traffic jam on the global highway. Because of the closure of Strait of Hormuz, 20% of world's oil is stuck. This makes everything from gas to groceries more expensive. It seems hard to control inflation. Recession chances have increased to 40%. If the Fed raises interest rate to fight the $100+ oil, they make the government's $38 trillion debt hard to pay off. If they lower interest rates, the prices increase and everyone's grocery bills explode. Inflation goes even higher. But here is the secret that no one tells. Supply chain crisis has happened before. It's a great opportunity to buy. In 1970s, it forced us to make fuel-efficient cars. In 2022, it forced us to bring manufacturing to the US. Every time when the supply chain breaks, the companies spend billions of dollars to fix it so that the same issue doesn't happen again. And if you look at these numbers from 1970s, 2007, 2009, 2020, 2022, a recession might be coming, but we saw in 2022, the market bottoms before the recession actually ends. Even in 1973 to 1975, when there was high inflation, which lasted for around 1 to 2 years. S&P 500 had grown more than 70% in the next 5 years. Let's address the fear number 4. AI seems like a bubble. Let's compare the stock price, the earnings, and the money being spent right now was 1999 or 2000 when the dot-com crash happened. S&P 500 forward stock price to earnings was around 25. But NASDAQ had reached around 100. The companies were being valued at 100 times the price in comparison to its earnings. Companies without any profit were being valued at just the amount of clicks record on their website. Right now, S&P 500 is valued at 27 to 88 stock price ratio in comparison to its earnings. But Meta, Google, Amazon, Microsoft have record profit. Their earnings are growing more than 15 to 20% each year. In 2000, the earnings was actually negative 10% before the crash. The NASDAQ price to earnings ratio is 1/3 of what it was before the dot-com bubble burst. Let's compare the capital expenses. Vendor financing was the real scam of 1999. Fiber optic cables had been laid in late 1990s that caused YouTube and Netflix to exist 10 years later. In terms of vendor financing, Cisco would actually lend money so that companies could buy Cisco's equipment. It created a circular loop of fake revenue that looked like growth, but it was just actually mounting debt. When interest rates rose and market dipped, these companies couldn't refinance and went bankrupt. In 2026, Google, Meta, Amazon, Microsoft are spending more than $500+ billion. But that is being funded by cash in hand. In 1999, tech capital expenditure was 67% of free cash flow. Right now, it is 40%. These companies are so profitable that they can spend $500 billion and still have money left. Apple, Microsoft, Alphabet have more than $100 billion each in cash. They are just using their profits from their existing monopolies of search, Windows, AWS, and investing into which could be the next one, which is AI. Right now, AI capex accounts for roughly 0.8 to 1% of the GDP. In 1999, it was 1.5%. So the spending would need to actually double to hit that age of GDP. In conclusion, the market never stayed down for around 10 years straight. It only happened when the internet came out and that burst in 2000. Apart from that, if NASDAQ falls more than 10%, it bottoms majority of the times within 1 to 2 months. Sometimes it takes 1-2 years, but it still recovers and reaches all-time highs. And this is why it's the best opportunity to buy, because you're getting companies, businesses at a discount. Hope you guys liked the video. Please like, share, and subscribe. It gives me the motivation to build more such videos like this. Thank you so much for watching.